While the world is distracted by stock market rallies, interest rate cuts, and crypto headlines, something far more important is happening quietly, deliberately, and almost invisibly. China is buying silver, not loudly, not with press conferences, not with headlines, but steadily. And this raises a question that almost no one is asking. Why would the world's second largest economy aggressively accumulate a metal that most investors have forgotten? Is China simply securing industrial supply? Or is it preparing for something much bigger? What if silver is not just a commodity, but a strategic monetary weapon? And what if the Chinese yuan one day is backed not by promises, but by real assets? If that happens, the global financial system as we know it could change forever. A quiet revolution is unfolding in global financial markets. And at its center stage is a precious metal that has served as currency and a store of wealth for centuries: silver. But today, silver is no longer just a commodity. It has become a strategic weapon, a geopolitical tool that could reshape global power dynamics. China, the world's second largest economy, systematically building a new financial architecture that challenges American dollar dominance. And at the heart of this strategy are precious metals, gold and silver. This is a story of economics, geopolitics, and the ambitions of an emerging superpower that could transform the entire global financial order. The dollar hegemony. Understanding the current system, to understand why silver matters, we must first understand how the current system works. In 1971, when President Richard Nixon severed the dollar's link to gold, the US dollar became the world's primary reserve currency based on faith and military might rather than tangible backing. This created what we now call the petrodollar system, the petrodollar. Architecture. When Saudi Arabia and OPEC nations agreed to sell oil exclusively in dollars, global demand for the greenback exploded exponentially. Every country needed dollars to purchase oil, forcing them to maintain dollar reserves. This wasn't just about economics. It was about creating artificial demand for American currency. Reserve currency status. Today, approximately 58 to 60% of the world's foreign exchange reserves are held in US dollars. Central banks, governments, and corporations all need dollars for international trade. This gives America an extraordinary privilege. It can print money to pay its debts, something no other nation can do without severe consequences. Financial control is geopolitical power. This system has granted America unprecedented power. The U.S. Federal Reserve has effectively become the world's central bank. When America imposes sanctions, it can cut countries off from the global financial system entirely. The SWIFT payment network, dominated by Western interests, becomes a weapon of financial warfare. But this system is showing cracks. The 2008 financial crisis, quantitative easing programs that printed trillions of dollars, rising U.S. debt levels now exceeding $34 trillion, and the weaponization of the dollar through sanctions have all made countries increasingly uncomfortable with dollar dependence. China's growing discontent. The motivation for change. China has multiple grievances with dollar dominance that go beyond simple economic concerns. Trade vulnerability. China is the world's largest exporter, yet the majority of its trade is settled in dollars. This creates a dangerous dependency. If U.S.-China relations deteriorate further, America could theoretically freeze China's dollar reserves, exactly what happened to Russia in 2022 when over $300 billion in foreign reserves were frozen. Inflation export. When the Federal Reserve prints money through quantitative easing, it effectively exports inflation globally. Countries holding dollars watch their purchasing power erode as America addresses its domestic economic problems. China and other nations bear the consequences of American monetary policy decisions they have no control over. The debt trap paradox. China holds approximately $800 billion in U.S. Treasury bonds. This creates a perverse situation. China finances American consumption and debt, receives low-interest returns, and remains vulnerable to dollar devaluation. If the dollar's value falls, China's reserves lose value. It's a trap that China desperately wants to escape. The sanctions weapon wake-up call. Russia's removal from SWIFT and the freezing of its central bank reserves sent shockwaves through Beijing. China realized that its economic sovereignty is illusory as long as it operates within a dollar-dominated system. What happened to Russia could happen to China. Loss of monetary sovereignty. China's central bank, the People's Bank of China, cannot pursue fully independent monetary policy. Because of dollar pegging and the need to manage dollar reserves, this constrains China's ability to control its own economic destiny. These factors have driven China to pursue what some analysts call de-dollarization, reducing dependence on the US dollar and building alternative financial infrastructure. The strategic pivot. Why silver matters while gold gets most of the attention in discussions about alternative reserve assets. China's strategic accumulation of silver reveals a more nuanced and potentially more powerful strategy. Industrial indispensability. Silver isn't just a monetary metal, it's absolutely critical to modern technology. It has the highest electrical and thermal conductivity of all metals, making it irreplaceable in numerous applications. Solar panels, electronics, batteries, 5G infrastructure, electric vehicles, medical equipment, and water purification systems. China's green energy revolution is completely dependent on silver. Each solar panel contains approximately 20 grams of silver, and China manufactures over 70% of the world's solar panels. As the world transitions to renewable energy, silver demand will explode. By controlling silver, China controls a critical input for the energy transition. Supply constraints create strategic leverage. Unlike gold, which has substantial above-ground stocks accumulated over millennia, silver is consumed in industrial applications. The Silver Institute estimates that about 50% of silver mined annually is used in industrial applications and doesn't return to the market. Moreover, only about 25% of silver mining is from primary silver mines. The rest comes as a byproduct of copper, lead, and zinc mining. This means silver supply is relatively inelastic. It doesn't respond quickly to price increases because miners are unprimarily targeting silver. The affordability factor. If China wants to back its currency with precious metals and encourage its 1.4 billion citizens to hold such assets, silver is far more accessible than gold. Average Chinese citizens can afford silver coins and bars, creating broad-based support for a precious metals monetary system. This democratizes the alternative financial system China is building. Gold-silver ratio arbitrage. Historically, the gold-silver ratio hovered around 15:1 to 20:1 for centuries. Today, it exceeds 80:1. This historically anomalous ratio presents a strategic opportunity. If China accumulates silver while it's relatively cheap compared to gold, a future reversion to historical ratios could multiply China's purchasing power. Stealth accumulation. Unlike gold reserves, which central banks must report to the IMF, silver stockpiling is largely unreported. China has been quietly importing massive quantities of silver for years. While official data is limited, China does provide transparency on strategic commodity reserves. Analysts estimate China has accumulated thousands of tons of silver. Between 2020 and 2023, China imported record amounts of silver from global markets. Hong Kong customs data shows massive silver flows into mainland China. The Shanghai Gold Exchange, which also trades silver, has seen unprecedented physical silver withdrawals, suggesting accumulation rather than trading. The Shanghai Gold Exchange, building alternative. Infrastructure. China hasn't just been accumulating precious metals, it's been building the infrastructure for an alternative monetary system, yuan-denominated gold contracts, in 2018. China launched yuan-denominated gold futures contracts on the Shanghai International Energy Exchange. This allows international buyers to purchase gold using yuan instead of dollars. It's a direct challenge to dollar dominance in commodity markets. Physical settlement. Unlike Western paper gold markets where less than 1% of contracts result in physical delivery, Shanghai contracts emphasize physical settlement. This grounds the market in real metal rather than derivatives, making it harder to manipulate through paper trading. The petroleum. China has convinced Saudi Arabia and other oil exporters to accept yuan for oil purchases, combined with the ability to convert yuan into gold on Shanghai exchanges. This creates a petroleum system that mirrors the petrodollar, but with gold and potentially silver backing. Cross-border payment systems. China's CIP's cross-border interbank payment system provides an alternative to SWIFT, while still smaller. It's growing rapidly and allows countries to conduct trade without dollar intermediation or exposure to U.S. sanctions. Silver as economic warfare. The strategic implications. Understanding silver as a strategic weapon requires thinking beyond traditional economics into the realm of financial warfare. Supply disruption leverage. If tensions escalate, China could restrict silver exports, crippling Western technology and green energy industries. The United States and Europe are heavily dependent on Chinese silver processing and manufacturing. A silver embargo would be economically devastating. Currency backing, credibility. If China announces that the yuan is partially backed by silver and gold, it immediately enhances the currency's credibility. Like fiat currencies, a metals-backed currency has intrinsic value. This could accelerate de-dollarization as countries seek more stable reserve currencies. Market manipulation, vulnerability. Western precious metals markets, particularly the COMEX in New York and the LBMA in London, trade primarily in paper derivatives. The ratio of paper silver to physical silver is estimated to be 100-to-1 or higher. If China demands physical delivery en masse, it could expose the shortage of physical metal and collapse the paper price suppression scheme, causing silver prices to explode. Financial system destabilization. A dramatic rise in silver prices would have cascading effects. It would validate the precious metals as stores of value, undermining faith in fiat currencies. It would increase production costs for critical technologies, causing inflation. It would shift wealth from west to east, as Asian nations holding physical silver see their assets appreciate. The BRICS alliance. Collective de-dollarization isn't acting alone. The BRICS nations Brazil, Russia, India, China, South Africa plus recently added members Saudi Arabia, UAE, Egypt, Ethiopia, Iran represent about 45% of global population and 35% of global GDP. Collective currency discussions. BRICS nations have discussed creating a common currency or trade settlement mechanism that bypasses the dollar. While details remain unclear, precious metals backing has been mentioned repeatedly. Russia's President Putin has explicitly discussed gold-backed trade settlements. Bilateral currency swaps. China has established currency swap agreements with dozens of countries, allowing direct trade in local currencies without dollar intermediation. These agreements total over $500 billion, creating a parallel financial system. Alternative development banks. The Asian infrastructure. Investment Bank AIIB and the New Development Bank NDB. Provide development financing without dollar dependence or Western institutional control. These institutions can make loans in yuan, rupees, or other currencies. Commodity-backed trade. Russia now accepts yuan for oil and gas. Saudi Arabia is exploring yuan acceptance. Brazil and Argentina have discussed trade settlement in local currencies. If major commodity exporters abandon dollar pricing, the petrodollar system collapses. The Western response. Defending dollar dominance. The United States and its allies aren't passive observers. They reactively defending dollar hegemony through multiple strategies. Interest rate weapons. The Federal Reserve. As aggressive rate hikes in 2022 to 2023 strengthened the dollar by making dollar-denominated assets more attractive. This creates economic pain for countries with dollar-denominated debt, reinforcing dollar necessity. Strategic reserves release. The U.S. released silver from the national defense stockpile in previous decades, though largely depleted now. This kept prices suppressed and reduced incentive for other countries to accumulate silver strategically. Paper market manipulation. Critics argue that banks use derivatives to suppress gold and silver prices, preventing them from reflecting true supply-demand dynamics. This discourages precious metals accumulation and maintains faith in fiat currencies. Military presence. America's global military dominance, particularly in the Middle East, ensures continued petrodollar support. The U.S. has historically intervened when countries threatened to abandon dollar oil pricing Iraq, Libya. Sanctions and coercion. The U.S. uses economic sanctions to punish countries moving away from the dollar system. Secondary sanctions threaten any country or company that does business with sanctioned nations, forcing compliance. The technological angle. Silver in the digital age. Silver strategic importance increases exponentially when we consider technological megatrends, 5G and 6G. Networks. Silver is essential for 5G infrastructure due to its conductivity properties. As the world adopts 5G and eventually 6G, silver demand will surge. China dominates this technology space and understands silver's critical role. Electric vehicle revolution. EVs require significantly more silver than traditional vehicles, approximately twice as much. With global EV adoption accelerating and China producing over 50% of the world's EVs, silver consumption for automotive applications is exploding. Solar energy expansion. The International Energy Agency projects that solar capacity must quadruple by 2030 to meet climate goals. This represents potentially 100,000 plus tons of additional silver demand. China controls this supply chain. Medical applications. Silver's antimicrobial properties make it invaluable in medical devices, wound dressings, and hospital surfaces. Post-pandemic awareness of infection control increases silver demand in healthcare. Water purification. As water scarcity becomes a global crisis, silver-based purification systems are expanding. China's Belt and Road Initiative includes water infrastructure projects that require silver. Internet of Things (IoT), billions of connected devices all require silver in their electrical components. The IoT revolution is a silver consumption revolution. This technological dependence means that controlling silver supplies gives China leverage over the industries defining the 21st century. The timing question: when will this strategy activate? China is playing a long game, but several catalysts could accelerate the strategy. Taiwan scenario. If tensions over Taiwan escalate to conflict, China would need an alternative to the dollar system immediately, as Western sanctions would certainly target Chinese financial access. Dollar crisis. If US debt becomes unsustainable or a major dollar crisis emerges, China could position the yuan as a stable alternative backed by real assets. Critical mass achievement. Once enough countries participate in alternative systems, reaching perhaps 30 to 40% of global trade, network effects make the alternative system self-sustaining. Oil market shift. If Saudi Arabia and major exporters significantly shift toward yuan, euro oil pricing, the petrodollar's days are numbered. Economic leverage opportunity. During Western economic weakness, China could assert its alternative system when resistance is minimal. The investment implications. What this means for markets' understanding. This geopolitical chess game has profound investment implications. Silver price suppression ending. If China's strategy succeeds, decades of alleged price suppression could end violently. Silver could experience explosive price appreciation, potentially reaching triple digits per ounce. Physical versus paper divergence. A disconnect between paper silver prices (COMEX) and physical silver prices could emerge if physical shortages manifest while paper markets remain manipulated. Currency instability. Major fiat currencies could experience volatility as confidence shifts. The dollar might weaken significantly if reserve currency status erodes. Commodities supercycle. Precious metals could enter a supercycle as they reclaim monetary roles alongside industrial demand growth. Geopolitical risk premium. Assets insulated from geopolitical conflict, like precious metals held outside the banking system, may command premiums. Conclusion. The future of money silver's transformation from industrial commodity to strategic weapon represents a broader shift in global power dynamics. China's challenge to dollar dominance isn't just about currency. It's about redesigning the entire architecture of global finance, trade, and economic power. The current dollar-based system has existed for only 50 years, historically, a brief period. Monetary systems change, empires rise and fall, and power shifts. We may be witnessing one of history's great transitions. For China, silver represents multiple strategic advantages simultaneously: industrial necessity, monetary credibility, investment value, and geopolitical leverage. It's a multi-dimensional strategy that positions China for a post-dollar world. The West faces a dilemma: defend the dollar system aggressively and risk accelerating its decline through heavy-handed tactics, or accept a multipolar financial world where American exceptionalism ends. For the rest of the world, the emergence of alternatives to dollar hegemony could mean more financial sovereignty, but also potential instability during the transition period.
And one thing is certain.
Silver has emerged from its shadow as poor man's gold to become a strategic asset at the center of great power competition. The metal that has served humanity for 5,000 years is once again proving its enduring value, not just as money, but as power itself. The financial war is silent, fought not with missiles, but with metals, not with armies, but with currencies. And silver has become one of its most potent weapons. The question isn't whether the dollar system will be challenged, it already is. The question is whether that challenge will succeed, how quickly it will unfold, and what the new system will look like. Silver will play a central role in answering those questions.